Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive for the week ending Thursday, April 2nd, 2026. We will cover key fluctuations and trends in indexes, sectors, stocks, and global markets. Kicking things off, I'm Max Profit. Key indexes showed a mixed performance this week. The S&P 500 index closed at 6,582.68, up 105.51 points, or 1.6%. Meanwhile, the Dow 30 index gained 544.56 points to end at 46,504.68, rising 1.1%. The Nasdaq Composite Index climbed significantly, ending at 21,879.18, a 471.10-point increase and a 2.2% uptick. Although mid-caps and small caps also rose, mixed trends continue to be observed. Despite closing higher, the overall market breadth leaned negatively across major indexes. The S&P 500 index saw 394 declines over 97 advances for the week. Notably, the Dow 30 index had more decliners with 26 versus just 4 advancers. The Nasdaq Composite Index had 2,007 decliners versus 1,019 advancers, showing a similar pattern. In terms of weekly performance, the Nasdaq Composite Index led with a 2.2% increase, indicating robust momentum. The S&P 500 Index followed with a rise of 1.6%, while the Dow 30 Index increased by 1.1%. Mixed trends observed in several indices keep investors vigilant despite favorable weekly returns. Focusing on longer-term performances, over a 10-year span, the Nasdaq Composite Index showcases strong growth with a 161% annual rate of return. The S&P 500 Index follows closely with a 122.46% annual return. The Dow 30 Index exhibits consistent yet slightly lower gains at 100.8%.
Checking out best and worst performing equities, I'm Penny Stock. Cyclerion Therapeutics shot up impressively with a strong positive trend, closing at 6.15 and up by 296.7%. Meanwhile, PMGC hit an all-time low despite climbing to 5.72, gaining 205.8%, but in a very strong negative trend. In terms of returns, DIH Holdings, US, Incros, Class A, was up 4% over the week despite flat movement. Cyclerion Therapeutics continued its bull run with a weekly return of 296.7%. However, PMGC faced negative returns year-to-date, showing a decrease of 95.97%. Looking at longer-term figures, Cyclerion Therapeutics shows a notable 135% yearly return, contrasted by DIH Holdings US Incros, Class A, with a negative ARR of 99.8% over the past year. PMGC also trails behind with similarly poor annual returns. For big-cap stocks, SBA Communications leads with a close at 204.4, gaining 22.7%. It exhibits a mixed positive trend. Meanwhile, Intel impresses with a very strong positive trend, closing at 50.38, marking a 14.2% increase. Over the week, SBA Communications achieved a total return of 22.7%, with daily gains, whereas FactSet Research Systems experienced upward volatility, closing at 227.68, with a weekly return of 16%. Mixed trends were prevalent. Annual returns paint a varied picture. Newmont sees a robust yearly return of 134%, with mixed trends, while Seagate Technology outshines with 402% in ARR over 1 year, depicting a strong positive trend. On to the laggards, HeartCore Enterprises plummeted to a new all-time low of 0.17, losing 96.4%, stuck in a very strong negative trend. Cambium Networks closely follows, recording a similarly grim trajectory with considerable downward volatility. In daily terms, Neo Concept International Group saw a drastic weekly drop of 87.3%, setting a new all-time low at 0.76. Observably, IO Biotech also faced severe losses, both apex and year, with a decline of 84.2%, showing significant downward volatility. Closing the week, HeartCore Enterprises displayed a drastic decline to 0.17, losing 4.60 or 96.4%. It hit a new all-time low and continues in a very strong negative trend. Neo Concept International Group also set a record low, closing at 0.76, down 87.3%. Major declines were observed among big-cap stocks this week. Nike led the fall, closing at 44.19, down 7.88, marking a very strong negative trend with consecutive declines for 6 weeks. Texas Pacific Land also closed down at 444.24, with similar downward pressure. In this week's trading, Nike posted a heavy 15.1% drop. Meanwhile, Texas Pacific Land fell 14.9%. Both continued to show strong downward movements. However, Texas Pacific managed to retain a positive year-to-date return. Examining returns over broader periods, Nike's 3-year result was a steep 63.97% decrease. Conversely, Texas Pacific Land exhibited resilience with a 3-year total return of 135.05%, illustrating a mixed trend amid recent pressure from the weekly drop.
And now on to U.S. sector performance. The communications services sector led with a 3.9% gain, closing at 426.62. It showed mixed negative trends. Real estate sector followed with a 3.1% increase, demonstrating a mixed positive trend. Basic materials sector was up 3%. Technology sector saw a 2.4% rise, but with some downward volatility. Utilities sector registered a 2.2% gain, maintaining a very strong positive trend. In terms of market breadth, the communication services sector had mixed results with more weekly advances than declines. Real estate sector showed significant weekly strength with substantial advances. Basic materials sector was strong as well, with more advances over declines. The technology sector, though up, experienced more declines on a daily scale. Finally, utilities sector showed a robust weekly advance-to-decline ratio. For total and daily returns, communication services sector posted a weekly return of 3.995%, despite a year-to-date return of -5.694%. Real estate sector gained 3.176% weekly. The basic materials sector had a noteworthy 10.568% year-to-date return. Technology sector, while volatile, returned 2.498%. Utilities sector achieved 2.219% weekly with strong gains YTD. Examining the annual returns, communication services sector has impressive 3-year annual returns of 30.56%. Basic materials sector shows promising 3-year annual growth at 7.72%. Meanwhile, technology sector stands out with a 10-year annual return of 21.59%. Lastly, utilities sector displays stable long-term gains with a 10-year annual return of 6.42%.
Let's delve into the U.S. communication services sector. Leading the pack, Paramount Skydance Corporation Class B has set a new all-time lower close at 9.52, climbing 0.64 from last week. Despite this, it continues with a very strong negative trend. Meanwhile, TKO Group and Netflix both show mixed positive trends, each rising over 5.7%. Alphabet and Meta platforms also closed higher this week, although they maintain mixed and strong negative trends, respectively. On to the total and daily returns in the communications services sector. Over the past week, Paramount Skydance Corporation Class B hit an all-time lower close, despite a 7.2% weekly return. TKO Group and Netflix demonstrated robust weekly returns, yet their year-to-date returns remain subdued. Alphabet's one-week total return was 5.3%, yet year-to-date figures reflect a downward trend. Meanwhile, Meta Platforms shows a slight rise in weekly gains. Examining the total and annual returns within the communication services sector, Paramount Skydance Corporation Class B posted a negative ARR for 10 years, reflecting its ongoing struggle. Contrastingly, TKO Group boasts a decade-long ARR of 27.95%, underlining its long-term strength. The ARR for Netflix stands at 25.02% over 10 years, while Alphabet holds a promising 22.62% in the same time frame. Despite recent gains, Meta Platforms lags behind with a lower long-term return.
In the latest sector performance, the energy sector closed at 910.85, dropping 33.77 points, or 3.5%. It recorded a new all-time higher close despite a very strong positive trend. The consumer cyclical sector fell 7.1 points to 1,738.3, marking 4 consecutive weeks of decline amid a strong negative trend. The market breadth data shows the energy sector exhibited one-week declines exceeding advances, hinting at widespread sell-offs. Meanwhile, the consumer cyclical sector saw notably more one-day declines than advances, contributing to its continuous downward trend. Despite this, the financial services sector experienced a net weekly gain. Examining total and daily returns, the energy sector shows a one-week loss of 3.57%, but maintains a year-to-date gain of 32.52%. The financial services sector achieved a small weekly return of 0.98%, but has a negative year-to-date return of over 9.5%. Meanwhile, the consumer defensive sector posted a positive weekly return. Over long-term returns, the energy sector shows stable growth, with a 10-year annual rate of return exceeding 7%. The consumer cyclical sector outperformed with a 10-year return over 106%, despite current headwinds. In contrast, the healthcare sector posted lower long-term returns, signaling mixed performance historically.
In the energy sector, trailing stocks have shown notable declines. Texas Pacific Land led the drop, closing down at 444.24, a significant 14.9% decrease. Meanwhile, EQT and Expand Energy saw notable downturns, with negative trends indicating continuous market softness. Diving into returns, Texas Pacific Land saw a substantial 14.9% decrease over the week. Both EQT and Expand Energy followed suit with double-digit declines. The year-to-date story was different, with Texas Pacific Land posting a 54.67% return, a bright spot amidst weekly downturns. Long-term annual returns reveal mixed trends. Texas Pacific Land's 10-year ARR is notable at 39.29%, overshadowing shorter-term losses. In contrast, Schlumberger posted a 17.18% gain over the year, yet shows historical challenges with negative 10-year returns.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, cryptocurrency, and commodities. Thanks for watching.